What's up, guys? So today I want to talk about risk management and just risk analysis in crypto and whatever you're trying to do. Are you trying to retire early? You're trying to buy a supercar? You're trying to buy a jet? Whatever you want to do, you can earn and buy your freedom in the crypto world. It is true liberation. And right now it's been somewhat unspoiled in the fact that you are able to get in on some of these projects early, and there's really no other market that you can earn these types of returns. Obviously, we've seen 10x, 20x, 50x, 100x. We've seen all this. You know, Dogecoin, the last bull run went up over 10,000%. You're not going to make that in real estate. You're not going to make it in the stock market. 10,000%. So, and we've seen other stories of this where people have put in smaller amounts and stuff like that, and it banged out hard. And you know, again, how much risk are you willing to take? Because it is possible in the crypto world if you know you make the right plays, you invest in the correct way for you and your timing. If it ends up being right, you can make life-changing money, or you can essentially secure your freedom. So let's talk about that, because you know we were talking about some of the meme tokens on Avalanche. There's certain issues with trying to go after that. Fees on Avalanche are high right now. So some people say, well, I don't want to do that. The fees are too high. Basically, it's $20 per transaction currently. The current rates and stuff like that, which is egregious, because that's supposed to be an advanced EVM platform where the fees are supposed to be low. But what's happening, it's kind of a combination of things. There's a lot of burns the way this thing is set up, and you know, at the end of the day, it's deflationary right now. So what can we do with that? A lot of people get trapped in these liquidity pools, or they want to take profits. What do they have to do? They have to have gas, so they have to have AVAX, they have to have more Avalanche. So they kind of get caught up in their own game in a way, and they have to buy more to get out of there. So I really kind of see the price of AVAX continuing to rise over the next 2-3 weeks as people try to take some profits and enter different liquidity pools that seem to be very lucrative. You know, the rates will go way up, people chase after it, and you know, this can be an opportunity. So how do you avoid the fees? Well, you can sit there and buy AVAX on a centralized platform. You could sit there and buy tokenized AVAX on the Binance Smart Chain. Now, what's the risk? You bought on Coinbase, bought on Kraken, that kind of thing. Is there a chance that the exchange could go down? It is possible. It's unlikely, in my opinion, for those two exchanges to go down. So you could just put it there, and we always say, not your keys, not your crypto. But you know, you take it off of there and you put it on the Avalanche chain, then you're going to potentially pay $20 to move it back off of there, back onto a centralized exchange to sell. So you've got that friction, unfortunately. And the same thing is true for Bitcoin and for Ethereum. Are you going to risk the counterparty risk of having it on a centralized exchange? And that's up to you. That's up to your goals. Depends on your time horizon. And you know, it's an unfortunate thing, because you got to pick and choose your battles on that. Now, you could buy AVAX tokenized on the Binance Smart Chain. What's the risk of that? Well, it's wrapped, and you have counterparty risk in these wrapped assets. And you know, there's been bridge attacks, this and that, and the Binance Smart Chain is partially a black box. So we don't really, it's not as decentralized as some of these other smart contract platforms, but the fees aren't as high. So again, pick and choose your battles there. And maybe if you do a mix of this stuff. Now, what can you do to have, you know, your position, you know, in Bitcoin, in Ethereum, in BNB, in these kind of like, essentially these world reserve assets as far as the crypto market is concerned? What can you do to retain those positions, but then also be able to engage in some of these other offerings and everything. Well, you can post it as collateral on these different money markets, whether that be Aave, whether that be Venus on the Binance Smart Chain, and you could lever against it, borrow some other stable coin that's, you know, pegged to the US dollar, and then trade that for AVAX, Phantom, Polygon, or something else. Then you can actually take that and repost it as collateral on Venus, and then you know, have a little more breathing room. You could do that. You can build an entire crypto portfolio really on the Binance Smart Chain, but again, I wouldn't put all your eggs in one basket. So I always retain, you know, I have my hands in a lot of different chains that are kind of separated by code. So something like Monero is a different code base than Ethereum, and Ethereum is a different code base than Bitcoin, Litecoin, and Dogecoin. So if you diversify within these different code bases, and then you know, diversify as far as like having your holdings on some, maybe on some centralized exchanges that maybe you have a limit order in, some of the stuff maybe you have as wrapped assets, or let's say on Internet Computer Protocol you have Keychain Bitcoin, so you can have Bitcoin over on the Internet Computer that's not wrapped. So cryptographically it's supposed to be more secure. I'm not a cryptographer. I'm just going to go ahead and believe them and you know, go with that. But you know what I'm saying? So it's a different sort of type of risk, different level of risk on these different chains, on these different platforms, whether it's centralized. Obviously, I have not had an issue with something like Probit, but do I trust Probit as much as I trust Kraken? No. I don't move, you know, huge sums of money through Probit. I don't, you know, there's certain other exchanges that I've used in the past. I don't move insane amounts of money, and I always do tests. I send $20, I send $50, I send a couple $100, you know, as smaller tests before I start trying to move thousands or tens of thousands, you know. So, you know, always check, double check, triple check your addresses. I've seen a lot of people make mistakes. I have one friend that sent $10,000 worth of USDC that was tokenized on the Harmony One blockchain, and accidentally sent that to Binance. They didn't support USDC on Harmony One, and then also on top of all that happened, so basically it didn't show up because it didn't support it. So it was sort of lost for the moment. And then the other thing on top of that, then there was a bridge attack on Harmony One. So essentially that $10,000 was gone. You know, I've seen people lose large amounts of money, you know, and again, we've seen what can happen with $500, $1,000, $10,000. That is a lot of economic energy in the crypto market. So you have to kind of pick and choose your battles, and it depends what your goals are. It's going to be very, very hard at this point, unless you're coming in with a substantial amount of economic energy, to get rich in just Bitcoin if you're just a long-term holder. Now, if you were trading in and out of it, doing swing trades, there is more of a possibility. If you're using leverage, there's more of a possibility. If you're trading into some of these other assets that have more of a run, there's more of a possibility. But again, it's goes with your risk. Some people are just all Bitcoin. There's nothing wrong with that. In my opinion, the only play that's stupid at this point is to be a no-coiner. It doesn't make sense to be a no-coiner, but if you don't have a lot of money, you're gonna have to somewhat trade your time, or you know, use your community efforts, use your social media to you know, earn airdrops, to blog on stuff like Blur, Steem, Hive, you know, that kind of stuff. Earn a little bit of crypto and then parlay that into maybe some other type of earning. Now, it might not feel like it's anything. I've had, you know, people sit there and look, well, why do you do that? And why do you sit there and keep posting stuff on, let's say, Steemit? Because, you know, right now with my current following, what I get upvoted and stuff like that, it might be 35 cents for a post, but I blew it out to DTube, I blew it out to Hive, I blew it out to Steam, I blew it out to Blurt, and then also those people might be watching this video, and then I could be earning AdSense from Google AdSense as well. So I'm sort of hitting a lot of chains all at once, and sometimes even little amounts of money over time can actually get me out of a bind. I've had it before where, you know, maybe there's only, let's say I have a certain amount of, you know, Liquid Steam or Liquid Hive, and maybe that's only $15 or $20 worth or something like that that's there, but I got kind of trapped maybe on a chain where I needed a little bit more gas to make a transaction go, maybe on the Binance Smart Chain or something like that, and I was able to keep things moving, keep the flow going. So these are kind of things I do that some people are going to sit there and say, well, it doesn't make sense, it's not worth it, that's not worth my time, da 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 da, and then they get in a position where, you know, they basically just everything's zeroed out, and then, you know, they don't have any kind of energy to keep the flow going or to really kind of be ready for anything kind of thing. So that being said, you're gonna have to pick and choose your battles with this stuff, and that's why before this stuff like really bangs out hard, it's always good to have all these different accounts. I mean, I have, you know, I essentially had accounts on like practically the majority of the exchanges, the majority of the fiat gateways that were popular in the United States, especially for this last bull run. You know, I had them for FTX. I didn't have anything on FTX when it went down. You know, fortunately, obviously, you guys know that I called the collapse 11 days before FTX. You know, but I have Coinbase account, you know, Coinbase account, Gemini, Kraken, Uphold. You know, I have all that stuff. It's already ready, so that if there's some kind of issue, there's some kind of withdrawal issue, there's some kind of issue at one of these exchanges, you have to be able to get into something else and keep it moving. And then you also have the Bitcoin ATM network if there were certain other issues, and maybe that's an outlet for you. So being able to get on and off these chains, having second, third, fourth options as far as various different exchanges, various different outlets, that's what's important. There's so much friction getting in and out of crypto. It's absurd, and it's not necessarily gotten any better, because again, as you know, the popularity rises or this stuff, the prices increase, what happens to these fees on the Bitcoin and Ethereum networks, it's egregious. And people will downvote me for that because they say, oh, you're talking bad about Bitcoin and Ethereum. No, I'm just telling the truth. It's a joke. You can't move this stuff for more than, you know, for less than $50. That's a joke. That's a joke. We knew this was a problem years ago, but you know what? The market has spoken. People went after those, so act accordingly. You know, we're all just adjusting to this market and people's behavior. People keep buying into Bitcoin, and a lot of the people that buy into Bitcoin and Ethereum, they're just buying on a centralized exchange like Coinbase, and they're never trying to move it. They don't understand how to move it. They don't feel comfortable moving it, and you know, that'll be that. So those who are trying to go after some of these other assets, then, you know, it affects us more, but they don't necessarily have to deal with that. And in some respects, it's kind of weird because these chains with the most friction actually end up kind of performing the best because people keep having to buy gas to like get out of their positions or keep the flow going, which is kind of crazy. And then some of these chains that don't have as much friction, then they don't maybe move as much. They don't appreciate as much sometimes. It's kind of insane. So, but you know, last cycle we had stuff with low fees that really banged out. You know, obviously Phantom. We had Harmony One. You know, ultimately Harmony One suffered that bridge attack, and that really was really hit that hard. It's going to be hard for that one to come back. But that being said, guys, don't put all your eggs in one basket. You know, pick and choose your strategies, pick and choose your battles, have multiple entries and exits, and you know what? Don't be a McBitch. If you don't have any money in the crypto market right now, you need to get active. You need to get active. My arm's tired from holding this thing up. I couldn't find my stupid little miniature tripod to sit there and hold this up. You know, I don't have the freaking suction cup thing to post on the window, but I'm not being a big bitch here. You know, I'm trying to hold this up, try to get you guys a video to post this and earn DTC, earn Hive, earn Blurt, earn Steam, earn AdSense, everything. Keep the flow going. Subscribe to this YouTube channel. Follow me on all social media at Brian Phobos, YouTube, Instagram, Steam, Twitter, Hive, DTube, Blur, everywhere.